We'll just keep buying, right? The price is going to go up. It's going to get exponentially harder, and the price is going to go up exponentially higher, and we'll just keep buying. And at some point, if we get to 5% of the supply, Bitcoin's probably going to be $1 million a coin. And if we get to 7.5% of the supply, Bitcoin will be 10 million a coin. If I'm lucky enough to grind to 10% of the supply, Bitcoin's going to be 50 million a coin, and someone will be whining that whatever, we have too much Bitcoin, but other people will have $400 trillion of wealth. Our view is it's a ratchet, and we're just going to keep cranking on the ratchet, and there's massive leverage here. I think everybody's winning if we do that.
The greatest wealth transfer in history is unfolding quietly, right before our eyes, as institutional investors wake up to Bitcoin's hard-coded scarcity. With just 21 million coins ever to exist, and over 19.5 million already mined, the supply is drying up fast. The math is simple and unforgiving. Every new buyer intensifies the supply shock, pushing prices to levels once thought impossible. MicroStrategy's Michael Saylor, a tireless Bitcoin advocate, spells it out clearly: we'll just keep buying. His strategy is based on one principle: as Bitcoin becomes harder to acquire, its price will rise exponentially. According to Saylor, if 5% of Bitcoin's supply is cornered, the price could hit $1 million. At 7.5%, it's $10 million. And if someone manages to secure 10%, that's a staggering $50 million per coin. This isn't just speculation, it's game theory playing out in real time. Every purchase tightens the grip on supply, creating massive upside for early holders. As corporations and even governments begin to follow MicroStrategy's lead, today's prices could soon look like entry-level bargains. The real question isn't if Bitcoin will soar, it's how high it will go when the final coins change hands. One thing is certain: those still waiting on the sidelines risk being locked out of the game forever.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
To equate Ethereum and Solana to Bitcoin is like equating balsa wood and clay bricks to steel. And yeah, you can also lever them, but you can lever balsa wood, but levering, you can build lots of things that are steel containers, and you can use rubber bands, but it's not the same thing. So there's a reason that securities law prohibits public companies from capitalizing on securities. And the reason is because you can lever a security at 100 to 1. And so if I actually issued 1% of the float of a security, I could take $10 million and create a $10 billion market cap company. And so you would literally have 10 million in the float, and then you would tell yourself you had $4 billion of collateral on your balance sheet after you levered it up, and then you would start to act that way. And then when the bottom of the structure comes crashing down, you get a situation like Terra Luna or like FTX. Both of those were examples of companies levered on proprietary tokens. And so Solana and Ethereum are they may not be securities, but they're definitely tokens. And as tokens, they're not a commodity. And so I would caution anybody listening here against levering up on a token, right, or a proprietary asset, because it's kind of like trying to copy my skyscraper and doing it with bricks or with aluminum or with copper, right? The entire thing's going to buckle, and lots of people are going to die, and it's going to be a catastrophe, and you're going to take out the entire city block. And that did happen. It has happened over and over again in the crypto world. Happens all the time. People think that they discovered leverage, and what I'm doing is not an intelligent or brilliant idea because I'm using leverage. The reason it works is because I'm putting leverage on steel. I'm doing it with the right material. I'm actually using a product which doesn't deflect, right? And so Bitcoin is a crypto asset which does not deflect. That's why you can lean on it with $10 billion of leverage or $100 billion of leverage. And if you do the same thing with FTT token or Luna, or pick your favorite token, if you do the same thing, you're going to find it will buckle at some point. And when it buckles, there's going to be catastrophe. Look, I think the key with Bitcoin is the protocol itself is stable. Nobody can censor the network. It's distributed enough. No one can censor or corrupt the protocol. No one can control the price. It is sufficiently decentralized and global that no company, no country, no capitalist has enough influence to be able to put it at risk. And it is the one thing that we can all agree on in that regard. So when we go to the question of companies adopting the Bitcoin standard, Jeff, I think the primary guiding principle is you want to do this well. The question is, are you going to adopt Bitcoin as your primary treasury reserve asset? That means like flip 90% of your long-term capital to Bitcoin, right? 5%, 2% doesn't really do the job. You really want the vast majority of your long-term capital. Substantially, you want 100% of long-term capital to be in Bitcoin. And I define that as you've got working capital. If you need $50 million in working capital, then you hold that in the fiat currency of your liabilities. Everything else is long-term capital. You flip that to Bitcoin. After that, right, you've got two parts of the business. You've got the operating business, and then you've got the treasury, or you've got the balance sheet part of the business. I don't have any advice to people on the operating part of the business. Every single operating business is different. The only thing you can say is that 0.1% of operating businesses are good, and 99.9% of operating businesses struggle at all times. I mean, that's the big piece of wisdom I have for you. If you feel like your business is under pressure and is difficult and challenging, that makes you one, of the 99.9% that feels the same way. The only people that don't feel that way are the ones that run the monopolies, that are either state-sanctioned monopolies or digital monopolies, and everybody else struggles. And so there's no simple unlock there. I'm going to tell you, get a monopoly from the government of the local country you operate in. That's my suggestion. Or maybe you're lucky enough to be Apple or Google or Microsoft. But if you're not, then the operating business is all about finding a monopoly. And it's not easy to fix that. It's pretty obvious, right? It's quite obvious. It's hard to be better than Amazon or Microsoft or Apple. So the real advice is focus upon the balance sheet, where it is very easy to be better than the US dollar standard or the fiat standard company. So that's the part of your business you can fix. You can fix your balance sheet. And most people don't. Like, most people don't focus on that. They put 98% or 99% of their effort into their P&L, and they're basically pouring 99% of their focus and their energy in a losing cause, and they're not going to win. And they're putting 1% into their balance sheet, where you're 99% likely to succeed on the balance sheet under the Bitcoin standard, and you're 99% likely to fail in the operating business on the fiat standard. But conventional wisdom is to focus on the operation and dismiss the balance sheet.
Ethereum and Solana may offer innovative platforms for development, but when it comes to true resilience under pressure, Bitcoin stands alone. While countless altcoins, from Terra to FTX, have crumbled under stress, Bitcoin's decentralized protocol has proven unshakable. Immune to censorship, inflation, and centralized control, Bitcoin isn't just another token, it's digital steel in a world of fragile experiment. Unlike flashy Layer 2 projects burdened by technical debt and regulatory uncertainty, Bitcoin remains brutally simple and incredibly strong. There are no smart contract vulnerabilities, no hidden leverage traps, just a fixed supply and digital scarcity that grows more valuable as altcoins continue to falter. As Michael Saylor puts it, 99% of businesses fail in fiat. Under a Bitcoin standard, you win. With over 16 years of stability and every "this time it's different" narrative proven wrong, Bitcoin is the only crypto asset that strengthens when others collapse. If you're serious about long-term gains, cold storage of Bitcoin offers more security than any over-engineered protocol. In a market flooded with overcomplication and collapse, Bitcoin continues to deliver, because when everything else fails, Bitcoin stands firm.
I think that all the layer 2 type applications, they're always very interesting to programmers, but no one's figured out how to scale them without some technical instability. You run into massive amount of technical problems, massive amount of security issues, and then massive amount of regulatory issues to do that. So I think that the best way to generate yield and generate a return is you buy the Bitcoin, you hold the Bitcoin in cold storage, and then you sell equity at a premium. That's the risk. When you're selling equity at 3 times NAV, you're literally selling dollar bills for $3 all day long. You have a money printer. Okay. It's a risk-free money printer. So why would you do anything else if you could literally sell dollar bills for $3 all day long? And so the creation of high volatility, high optionality public equity, and then bonds, convertible bonds, fixed bond, corporate bonds, or preferred stocks. All of those are by far the best, lowest risk way to generate yield off of the underlying Bitcoin. They solve the compliance issues, right? Because you're selling a compliant security on a compliant exchange. So you don't run into this issue where you did something really cool that is illegal in the state of New York, right? Or it's illegal somewhere. So they solve the compliance issues. And then they also solve the scale issues. If you have a good bond, someone will buy. I've had meetings where someone gave me a $500 million order after the meeting.
Yeah.
Like, can you sell $50 million of something in 20 minutes? I've sold $250 million of something in 20 minutes. So if you want to scale the business, if you want it to be compliant, if you want to generate substantial material yields, then I think you want to do it by issuing securities. And of course, there's one ladder of securities in Japan, which are different than securities in America or US, which would be different than Brazil. It would be different in France, different in the UK, different in Germany, different in Switzerland, right? Different everywhere in the world, in Canada. So basically, securitizing Bitcoin in some kind of wrapper, it could be as simple as, okay, here's an ETF, but it could be here's a 2x ETF. It could be here's a Bitcoin-backed bond ETF. It could be here's the bond. It could be something else. It could be here's the option. Those are all the most compelling ways. I think the reason that certain people in the crypto industry don't embrace it is they don't have the technical financial capability to create these compliant instruments in these markets. So they go for the crypto token approaches, or quote unquote crypto native. But the bottom line is the crypto native approaches are only 1% of the opportunity, and they're 100 times as hard. And so the real money here is going to be made by more conventional financial firms that are going to issue $100 billion worth of Bitcoin-backed bonds, and then $1 trillion of Bitcoin-backed bonds. And then when people go, oh, well, $1 trillion, I guess, is saturated, then they're going to issue 10 trillion of Bitcoin-backed bonds. And people watching are going to complain that it just seems too simple, right? It's like, and what I see a lot, Jeff, in this market is I run into crypto people that have been in the business for a decade, and they have very complicated ideas that don't work.
Yes.
And I offer them a simple idea. I'm like, here's an idea. You're a public company, sell your equity, buy the Bitcoin. They're like, no, that'll never work. Okay, well, I guess it might work. Well, what if the Bitcoin goes down? Well, blah, blah, blah. Okay, I guess it worked. And you know what the latest pushback is, Jeff?
Let's hear it.
The latest pushback is, well, it worked for you, and it worked so well that you're the winner and there's no room for another company to do it in the market. So we literally went from, I don't think it'll work at all, to it might, to it did. Oh, it worked too well. That's my excuse for why I'm not going to do it.
Yeah.
And people just come up with these gigabrain excuses for why they don't want to do the simplest thing in the world. And The reason it works, by the way, is everybody wants to be able to buy the equity and borrow against the equity from their existing wirehouse.
Bitcoin is at a critical point in its market cycle, holding strong above the $81,000 support level while facing resistance around $88,000. This consolidation is happening as global markets are shaken by growing US-China trade tensions, making Bitcoin's stability even more noteworthy. Despite the broader uncertainty, sentiment in the crypto space is turning optimistic, especially in the futures market where rising open interest and bullish funding rates suggest increased institutional interest. Aggressive taker volume further supports the view that accumulation is quietly underway beneath the surface. These market dynamics echo Michael Saylor's thesis that Bitcoin is the ultimate hedge against macroeconomic instability. As a decentralized, scarce asset, it continues to gain relevance as a digital safe haven. Technically, Bitcoin is hovering near its 200-day exponential moving average, a level closely watched by institutional traders. Maintaining support at $81,000 is critical to avoid a potential downside move, while a breakout above $88,000 could trigger the next leg upward. With futures data looking strong and on-chain metrics holding firm, the stage may be set for Bitcoin's next big move. Whether this period of sideways action becomes a springboard for new highs or a pause before a deeper correction, Bitcoin's resilience is once again drawing the attention of serious investors. In an increasingly uncertain world, it remains at the forefront of the digital asset revolution. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.